welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have John Worth, Head of Research, Investor Outreach, and Economist at NAREIT, the National Association of Real Estate Investment Trusts. John joins me to discuss why more institutional investors will likely consider REITs for their portfolio strategy in 2023. It is great to have you with us, John. Welcome to Trade Talks.
Thanks for having me, Jill.
All right, let's set the macro backdrop here. How are REITs entering 2023?
I think if I have to put 2023 in one word, it's resilience. While a higher rate, slower growth environment is not good for any sector of the economy, when we're looking at REITs, we're seeing them coming into the year on the back of very strong earnings with very well managed balance sheets. So, and in fact, REITs posted very strong earnings in 2022, despite their poor stock market returns. And so they're entering 2023, I believe, having meaningfully priced in a higher interest rate environment and slower growth.
What's attractive about REIT balance sheets?
So REITs have built balance sheets that we think are very well prepared for a period of higher interest rates. They're entering with a very low interest expense burden, lowest on record, in fact. And they have historically low leverage, very well-structured debt. The weighted average term to maturity today is over 7 years, and more than 85% of their debt is fixed rate. So we think that they're well situated to navigate a period of economic uncertainty because of that balance sheet strength.
Why is there a wide valuation gap between REITs and private real estate?
So this is something that we see happen during periods of rapid change in commercial real estate. We see that REITs historically price in changes earlier than private real estate. So today, the gap between public and private real estate is quite wide, but that lead lag relationship, which tends to be somewhere on the order of 12 to 18 months, is not that unusual. Going into 2023, what we're really looking for is to see how that large valuation gap starts to close. That can happen both because REIT valuations go up, and we think that private real estate valuations will come down somewhat. And those two markets will come back to equilibrium throughout 2023 and into 2024.
Why do you think more institutional investors will consider REITs for their portfolio strategies?
This is one of the things that has been a real trend over time, is institutional investors pairing public and private real estate, REITs and private real estate portfolios very successfully. And that's because REITs have really been on the forefront of real estate innovation in terms of embracing new property types. Well, I think everyone understands that REITs, like any commercial real estate entity, they've got exposure to retail, office, residential. I think what sometimes people don't recognize is the degree to which REITs have innovated into new property sectors. They actually offer meaningful opportunities across 10 different property sectors, ranging from office, retail, residential, but through to healthcare, hotel, self-storage, and all the way to integrated logistics, cold storage, data centers, and cell phone towers. So they're owning and operating some of that real estate that's really powering both the traditional economy and the modern economy. The other thing that we're seeing investors turn to REITs for is really access to global real estate. They offer easy, liquid access to commercial real estate around the world. And finally, for the investors who are using ESG either as an investment objective or as part of their risk management, REITs provide access to some of the best-in-class performers in both E, environment, S, social, and of course in governance.
It's so interesting, John, because when I think of ESG, my mind goes to energy, airlines, the services sectors. More specifically, what are some of the ESG attributes as it relates to REITs?
Yeah, I mean, and it's, ESG, it's no surprise, has really become part of that investing landscape. And as owners and operators of structures, one of the keys for REIT ownership is understanding the sustainability, the energy use of those buildings. In fact, today we have about 2/3 of REITs who are on our ESG dashboard at REIT.com are actually publicly disclosing their carbon emissions and sustainability goals. And we've got about 83 of the top 100 REITs that actually own green certified buildings. So they're really taking this seriously, and we think making strides towards sustainability.
All right, John, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.